Hi, I'm Christine Short, Associate Director with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we take a look at expectations for peak fourth quarter earnings season. This week marked the official start of fourth quarter earnings season, kicking off with Alcoa reporting yesterday. The sole aluminum company in the index reported earnings of 4 cents a share, missing estimates by 2 cents. However, revenues of $5.6 billion managed to beat estimates by $241 million. For the overall S&P 500, analysts expect the fourth quarter to grow 5.7% year over year, down from the 9.6% estimate at the beginning of the calendar quarter on October 1st, and below the 12-year average of 8%. Earnings per share are pegged to come in at $27.87, which would be a new record level of EPS for the S&P 500 index. This will be the 7th consecutive quarter of record EPS for the index, bringing overall calendar year earnings to an estimated $109.01, the 3rd consecutive yearly record. We expect sector performance for the fourth quarter to be similar to what we saw for the third quarter. The telecommunications and financial sectors should be the biggest leaders, with growth of 78% and 13.5% respectively, while we anticipate the energy and utility sectors to be the biggest laggards and the only two sectors with negative growth. It is important to keep in mind that there are only 6 companies in the telecommunications sector, the smallest number for any sector. For this reason, the 78% growth rate doesn't carry much weight, as the overall market cap of the sector is only 2.3% of the entire index. The high year-over-year growth rate is due to the fact that Sprint Nextel is no longer in the index, a company that dragged on the sector in the year-ago quarter. Analysts expect the companies in the financials sector to make a comeback in the fourth quarter. After results of 4% growth in the third quarter, we now expect growth of 13.3% for the sector, resulting from strong expectations for the insurance industry and the real estate management and development industry. On the flip side, analysts expect the energy and utilities sectors to be the laggards this quarter, with negative growth of 6.6% and 5.7% respectively. For the energy sector, we anticipate companies within the oil, gas, and consumable fuels industry to be down 9% year over year, a result of lower refining margins and weaker than usual seasonal demand out of Europe and Asia. And for utilities, analysts anticipate the electric utilities industry will be the biggest drag for the sector, down 11.9%. Fortunately, the utilities sector has the second lowest market cap weighting in the index, only making up 3%, and therefore having a very little impact on the overall growth rate. Earnings season continues next week with 26 companies scheduled to report. I'm Christine Short, and thank you for tuning in to this weekend's edition of the Lookout Report.